Welcome back to Crown's Crypto Cave. A little bit of a different video today as I relax on this lovely Saturday morning. Anyways, I wanted to provide some analysis on my overall thoughts on the current direction of Bitcoin. Yes, first things first, I should address the topic of this video. It is a little bit of a clickbait title. However, I will be showing exactly where I'm getting that from. But first things first, I need to describe where we've come from and what's likely to happen in the next 3 to 5 months, in my opinion. Okay, as you see right here, we have a Bitcoin chart on Bitstamp, one of the longest running Bitcoin exchanges. It's been around since the inception of Bitcoin in late 2008, the Genesis block, as they say. Anyways, with this chart going all the way back about 9 or 10 years, this is a weekly, by the way, we have a logarithmic trend line that has been essentially valid all the way through. Now let's use these main points right here. Yes, okay, there we go. Again, not the biggest fan of diagonal trend lines. However, this one does have some validity to it. Anything that's been around for 8 or 9, 10 years, as we're now in 2018 and Bitcoin Genesis block in about 2008, 2009, this is certainly significant in my opinion. So with this, just as it stands, that is our logarithmic trend line. This is a very important trend line, and I want to point out a couple things about this. Now, first things first. This trend line has never been broken in the 8 or 9, 10 year history of Bitcoin. I can't count, so I'm just gonna call it 10 years. History of Bitcoin, it's never been broken. And more importantly, every time that Bitcoin has touched this logarithmic trend line, it has never gone lower. In fact, if you bought anywhere along this trend line on any of the touches, you had kind of a perfect trade, actually, as you never had to really even be underwater. So significance, certainly significant in a historical sense. Now, there's three things that stand out massively on this chart, and it is what will lead into the discussion that we will be getting to in just a few minutes. We have represented market cycles. A bullish market cycle, parabolic advance, followed by big drop-off. Parabolic advance in 2014, followed by a big drop-off. And parabolic advance in 2018, followed by a nice drop-off so far. Okay, these are market cycles. Charting is very interesting because essentially we're not really charting Bitcoin. We're charting human emotions. Human emotions. In these parabolic moves, we are looking at greed, exuberant irrationality, fear of missing out. In these big drawdowns, we're looking at fear, uncertainty, doubt, the dark side. Just kidding. I really do hate that fucking FUD word. However, it is relevant in this discussion because, again, we're charting human emotions. Humans, anatomically modern Homo sapiens, have basically been the same things for hundreds of thousands of years or whatever you believe. If you don't believe in dinosaurs, and I guess 2,000 years, we're all the same. And we have a shit ton of conditioning in our minds that basically no one can get out of. Or unless you're like some sort of a Buddhist monk, living in a cave somewhere, then maybe you've gotten away from these pesky human emotions. Anyways, for the majority of people, and especially the market participants in something like Magic Internet Money, you would imagine that that a lot of people do fall prey to these emotions, and it's normal. It's normal. You see this across all sorts of trading assets. It doesn't matter if we're looking at Magic Internet Money or commodities or equity options, where I come from. It's all essentially the same. So market cycles are something that I've, in my experience, found that I can generally, I don't want to say count on because that's not, a good technical analysis word, but they do have a high degree of playing out is what I want to get across. So going back to 2013, we can use our little lovely measuring tool right here and go from, first things first, let's actually draw out some similarities. There's a logarithmic trend line to be made on all of these charts. And it's very, very similar. So in 2018, just to kind of demonstrate this, we have a logarithmic trend line going all the way from here to here. We have since broken out of it. Let's just extend it down, get some nice, beautiful symmetry in these charts going around. And it looks, so we broke it right here, and we're coming back down and testing it right now. In 2013, we have a very similar thing as well. Look at this. We have a logarithmic trend line right there. We broke it. We actually come back down and test it and then go parabolic. In 2014, we have a logarithmic trend line right around here, and we break it somewhere around here. Let's make this a little bit prettier. Let's use some wicks here. We break it right around here-ish, and then we actually never break it again. So we actually do find it at support going onwards from here. It's just with these diagonal trend lines, it can act as support a long ways down. Anyways, my point is that now we can make a little bit of measurements between these different market cycles. All right. In 2013, let's get our measuring tool out and flying around. We have basically a percentage move drawdown from the top to the ultimate low of about 77%. And then it took this long to get above that logarithmic trend line in 2013. In 2014, we have a very similar area. If we go to the logarithmic trend line again, the break of it and confirmation above it, it took 175 days and a 70.51% drawdown. And in 2018, we have a very similar drawdown as well. What is this? Oh my God, another 71% drawdown, almost to the dot, and 126 days before we eventually cleared ourselves over this logarithmic trend line. All right, so putting them back all in full motion. Hopefully everyone can see this. Sometimes my charts can get a little bit convoluted. I understand that. Anyways, my point here is that these market cycles have very, very brotherly characteristics of symmetry about them, right? Down to the percentage drawdown, 77%, 70.5%, and 71%. The days played out, 133 days, 175 days, 126 days. So now you're probably thinking, Crown, what the fuck? We're probably doing 2013 and we're going to go back onto all-time highs. Well, let's say, listen, there's actually a little caveat with this, right? So we took 126 days to take out the logarithmic trend line right here and 133 days to take it out right here. So you're probably saying, we're not playing out 2014, that it's different. The fundamentals are different, Crown, so shut up. It's a bunch of FUD. Well, here's the thing. A lot of people, you're right, the fundamentals are different. There's more people involved in Bitcoin now. There's more people with their eyes on this asset, and that means that there's more players in the game. More people means that there's more interest, and with more interest, it means that it's unlikely that the prices will go, or sorry, that the time involved will take as long. So I would say that this is actually a point in the favor of the 2014 to the 2018 scenarios. Furthermore, looking at the weekly RSI in the 2013 market cycle, we never got close to the 50 on the RSI. Or sorry, we did get close to the 50, but we never got below it, which is the important part. Below it is kind of in traditional bearish territory. Below 45 definitely as well. In 2014, you can see right here, we got below it for a split second. Tested it right here, right before going above the logarithmic trend line. Then we popped back up, tested the bullish zone around 60-ish, and said, nope, we're not ready for that yet. And then fell all the way down. Good English, Crown, and basically stayed underneath 50 in the bearish territory for about a year, until this whole area played out. Anyways, in 2018, what's this? We go below the 50 right here, right before we pop up back above the logarithmic trend line for just a second, kiss the bearish zone, then pop back up above the 50 for just a second, where we say, I don't think so, and then come all the way back down, and now we're living below the 50 again, getting into bearish territory. We are resting right alongside this logarithmic trend line right now, as you can see. So that is similar as well to 2013. As you can see, we kind of came back down and tested it and kissed it. However, in 2014, it looks like we're actually moving much faster along this sort of, I really don't like using this fucking word, but fractal-like nature between these two patterns. So again, I think that I see more similarities between 2014 and 2018 rather than 2018 and 2013. So I believe that is what is likely playing out. I'm sure also people are saying, well, you know what? Mt. Gox costed that in 2014. So blame Mt. Gox, and we're not having Mt. Gox happen again. Well, yes, you're right. However, news can be spun both ways, right? News can be spun any which way that you want. And this isn't any sort of conspiracy theory or anything like that, but think about it just yourself. You can probably verify this yourself. If Mt. Gox was hacked and all these coins are now off the market, then there's technically less amount of coins available. And with more scarcity, that means likely the prices go up, just as with any asset. More scarcity, more demand, price is the other variable. Now it goes up. So again, you could have spun that in a bullish narrative. It just happened to be that Bitcoin really just played out a parabolic move, and then we saw this kind of shit play out. Okay, so that brings us to the question: if we are playing out of 2014, where can this thing land? All right. Okay. Few things to be aware of here, right? In 2014, we never break down below this logarithmic trend line again. We tested a couple more times, but as you can see here, this logarithmic trend line would line up likely on this on the big logarithmic trend line. Sorry, this logarithmic trend line would meet this logarithmic trend line that isn't fucking redundant enough, around this area right here, around 4,000 area, if you kind of extrapolated this sort of price action around there. So 4,000 area, pretty damn good. Do we have anything else pointing in that 4,000 area? Well, we do have a very nice horizontal level being put in right around here. Oh, what's this? 4,000. Okay, what about this right here? Where do we find our lows? Right around here. Oh my God, look, the top of that, beautiful. That actually equate with much lower. Anyways, let's use some fibs as well. There's some interesting things to be said from the Fibonacci perspective as well. If we take a Fibonacci retracement all the way from the low of 2013 to the high of 2014, we can see that Bitcoin basically accumulated between the 786 right here, just extrapolating these out. And if you haven't noticed already, I put in an 886 Fibonacci retracement right here. This is traditionally not on your Fibonacci retracement tool, but it is a Fibonacci number, so it is important. And we can see that Bitcoin very, very clearly accumulates between these levels during those market cycles. Now, what would that equate with in 2018 if this is indeed what's going on? All right, we need to take a Fibonacci retracement all the way from the ultimate low of the 2014 cycle, take it to the high of the 2018 cycle. And what's this? That gives us somewhere around this 4,100 level, perhaps all the way down to 2,300. So possibility. Now, would that make sense in the context of this line? Actually, it would. It would be somewhere along here. Anyways, I'm not saying that we're going to come all the way down there. In fact, I really don't think that we will come all the way down there. But that would be like the ultimate low. As you can see here, we just briefly wicked below it for a few seconds, essentially. If we use a candlestick bodies, do we get anything different? That's the real question here. Yeah, it's a little bit more accurate using the candlestick bodies. So let's do that in 2018 as well. So candlestick right there. Candlestick right there. Yeah, it's about the same, right? It's about the same. Okay, cool. All right, so we got that. Check. Now, look at the weekly 200 exponential right here. The weekly 200 exponential, this purple line right here, is very likely going to line up somewhere along this logarithmic trend line at some point if we do continue this downwards momentum. Where did we end the 2014 market cycle? With a touch along the along the 200 exponential moving average. Interesting. Very, very interesting. Okay. Now, let's see if we were to take this area, because again, we can kind of make the assumption now, again, this is making an assumption is what I really should say, that we're going to play out something similar to 2014. So if we did take this forecast and bring it all the way down to the ultimate low right here, that would be about a little bit over an 85% drawdown, 406 days. Now, and look at this, it's touching right around here. So if we extended this to about 80, let's see where it comes in around this area right here. Oh, look at that, 81%. So again, it's not perfect, but it's damn close, and it's right along that 786 area as well. Then that would come right around 4,000 again. Okay, very interesting. A couple more signs pointing in that same direction. What about this? If we go to a daily time frame, let's see if we can come up with any sort of measured moves that would point in this direction as well. All right, I see one thing here very clearly. We have what looks to me like an inverted cup, something like this, where we have the cup right there, and perhaps we have it looks like the handle is somewhere around here, perhaps. Okay, so let's draw that in. We have some sort of a rising channel handle, it looks like, something like this. Something like this. Not perfect. Again, don't hate me for my drawings. This is, I'm just kind of eyeballing it right here. So that's not the important part. This does look like an inverted cup and handle to me. We have the right volume signatures, the right shape, and let's make a measure move based off this and see what it spits back out. Okay, let's try to get it as straight as possible. Of course, it's fucking impossible for myself because I failed grade school drawing and all that kind of stuff. And if we apply that to the breakdown area, which we do have confirmation of a break, where does it spit back? Right around this 4,100 level. Look over here where we have this horizontal support coming in. Very interesting. This is a major area in the history of Bitcoin as well. We have a very, very strong level of support and / resistance around here that we broke out of before, and huge volume being put in on this capitulation area right here. So it's a very strong area of interest is what I'm getting at. Comparable volume to both the capitulation spike right here and on February 6th. Okay, very interesting indeed. So a measure move pointing in that direction, Fibonacci's pointing in that direction, and the weekly exponentials lining up for that as well. what else can we look at? How do we know when we actually get the full on turnaround in Bitcoin in 2014? Well, you can see right here, this is the low of your lows, and right here we just kiss the oversold region on the RSI. I'm actually using a little bit of a higher period on my RSI, so if you do try to recreate this yourself, you're gonna get a little bit different numbers, but for all intents and purposes, it's good enough. It should all be synonymous with each other. Anyways, you can imagine here that if we did start to forecast this area, if we did start to make some sort of a resistance along this area, as you can see with the exponential on this RSI, we'd come somewhere down along here, late 2018, and let's actually make this a good trend line, something like this. We'd come somewhere around here, late 2018, perhaps early 2019. So that would equate to about 336 days in all to find the ultimate lows, and in here obviously it took 400 days. So it looks to me like we're in some sort of an expedited scenario of this. Now, with all that said, let's get to the fucking topic of this video before you guys regale me in the fucking comments telling me I'm a FUD. This is bullshit. Technical analysis is stupid. Well, you're right, it is stupid, but anyways, it's fun. Okay, so here's the consolation prize, is that this is really an opportunity. This is an opportunity with our awareness right here. Is this going to happen one-to-one? I have no fucking idea. This is the best way that I can come up with an explanation from a technical analysis standpoint, however. So I do believe that there is validity in that. This is what I use to trade. This is how I make a living. So again, there's something to be said about that, right? Anyways, perhaps now with the 2014 and 2018 parabolic rises, we have two major tops to be putting in some sort of another upper trend line. So let's just extend this out. This is where it gets a little bit interesting if you want the full-on bullish view, and perhaps this might help people make a little bit more long-term decisions. Now again, we have a way of looking forwards into the future. So going back to the title of this video, Bitcoin in 2020 will be as low as on the bottom of this scale at 17,000 and as high as a little bit under 100,000. So 92,500-ish. Again, this is not perfect. These trend lines, just a very small degree change of them creates like a massive change in the overall forecast. So take it as like a guideline, right? Then you can start really getting to these crazy numbers that you hear a lot of people on YouTube talking about, like Bitcoin by 2022 to, I don't know, what is this, 100,000. So the bottom of this area would be, this is 2022 right here. The bottom would be about 135,000, and the top would be the upper bound would be about 420,000. Great number. Anyways, so the way that I look at this is like it's not an exact thing, right? It's not an exact thing, but we do actually have a way forwards now from a technical analysis perspective that does line up with the fundamentals of Bitcoin related to how scarcity implies a greater value as time goes on. So when you do hear these numbers thrown around like 500,000 by 2020 or whatever the fuck, while I don't agree with that, I can show you that there is actually technical analysis explanation for this that lines up with those fundamentals. So again, there are a couple limitations to this. This is technically a rising wedge that we're operating in right now. Is that a good thing or a bad thing? Well, technically, rising wedges typically do break down to the downside. Statistically speaking, they're more likely to. Does it mean that it will? No, actually it doesn't. If you guys remember, at the end of 2017, we had a major rising wedge going all the way to about 8,000 or 9,000, and Bitcoin actually broke up above it and went parabolic to 20,000. I remember everyone thought that 7.5 to 9,000 was going to be the top for the year. No, we actually ended up going parabolic right after that, and that's when things got a little bit crazy. So as it stands to me, if we did, I would make decisions off that based off if we did indeed close above this area right here and started confirming ourselves above this upper bound, then likely this analysis is way too undervalued and we're just going to go parabolic from there. On the other side of the token, if we do break out to the downside, well, watch out below. There's support built up here at 4,000 and here at $150. And also right here, we do have a level right here as well, coming from this other high. As you can see, that is a relevant level going forwards. And you know what? Let's just put in a level right there, just on our current high. Now, I do want to point out this. On the RSI, there is actually something a little bit damning here. Maybe not damning, but concerning. We do actually have bearish divergence over a long period of time. Is this relevant? Maybe, maybe not. There's actually no way to really know this for sure. But again, I need to present everything here in a responsible way to kind of get all these thoughts out. So yes, we do have bearish divergence from 2013's high of about, 200 bucks or like $100 or 200 bucks, whatever the fuck it was. Then a little bit. So the RSI is making basically a downtrend as we go forwards here. Something like this, We're basically making higher highs in price action, significantly higher highs in price action, with RSI getting lower highs. So it's telling us that the move is losing momentum. Now, is this relevant or not? Actually, I'm not quite sure, and the reason for that is because this is over an extreme long period of time, 10 years plus, right? 10 years plus, or sorry, not 10 years, but almost 10 years, close enough to where I can call it 10 years and not feel bad about it. So is it still relevant? I don't know. Perhaps it's also something to be said about the rising support on this area right here as well. Maybe it's going to be a scenario that we find somewhere around here as support, around the 42 on the RSI. Possible. We don't know yet. We don't know. However, again, I do see a lot of similarities between 2018 and 2014, so I'd be very comfortable, not very comfortable, but I feel a good degree of certainty from a technical analysis perspective saying that somewhere around here is likely to be the lows, and it's probably going to happen sometime in the next 3 to 5 months, I guess you could say, depending on how expedited things are. Maybe, I guess this technically lines up with what, in August to September, some area. So August to September could be the ultimate low if this area does hold true. And you'd imagine that after that we put in some sort of a sideways area like this. It also needs to be said that the reason why Bitcoin was really able to put together this incredible run in 2017 was because there was so much time spent going sideways here. Now, you're probably wondering, Crown, where the fuck do you get all this shit in your head? Are you crazy? Are you a scientist? Are you a wizard? Or are you just an idiot? Well, maybe all these things. However, I explained it in full detail in my upcoming technical analysis program, so just a subtle shill to my own program. I spent the last few months basically locked inside my room putting together this program. It's complete with all sorts of PowerPoint presentations and mainly examples, a lot of examples to go alongside the material presented. So again, I believe that is the best way to learn is with hands-on material. So that's what I tried to recreate as best as possible. It goes all over all sorts of things. Initially, it started out as a technical analysis program. However, now it's turned into like a full-on risk management, trading strategies, technical analysis program with all sorts of different dynamics. Essentially, I wanted to create something that I wish that I had when I first started, so that I could just go straight in with all the information that I needed to get, to make this a living, which is what I do now. So this is quite literally the strategies that I use myself to live while trading cryptocurrencies. I can verify it myself that it actually does work because, well, I've been doing it. I've been doing it my whole adult life pretty much. So again, guys, that's going to do it for this video. I will say this, if you another subtle shill, if you will, there will be a link to my BitMEX referral link in the description of this video. It will actually benefit you. It'll take a percentage off of your trading fees, so that's, it's good for you. I don't want to offer you something that's not going to fucking benefit you, of course. Like, it's going to benefit you. It also, also it comes back to me as well. So it's a nice give and go. Of course, I would really appreciate it. Do you have to use it? Absolutely not. I'm not going to fucking hate you if you don't use it. I'm not going to be mad. I'm not going to like come to your house and be like, hey, about that BitMEX referral link, you motherfucker. No, of course not. Of course not. But I would really appreciate it if you do use it. And hey, if you do get a chance to buy along somewhere along this trend line right here, that might be the time where margin and leverage can be a major life-changing opportunity. Now, if you are an American and you realize, hey, Crown, I can't use BitMEX, well, use a VPN. It's called i.me or Tunnel Bear. All you need it for is the initial sign up, then never again. You didn't hear that. Anyways, that's going to do it for today's video. Again, this is an opportunity here. I'm not trying to be Mr. Foot. I'm trying to be Mr. Opportunity of a lifetime. You can be one of the heroes that gets to be a buyer along this trend line, perhaps, if this does indeed play out. So with awareness comes opportunity, and this is what I believe could be the opportunity of perhaps our lifetimes, because you can be the kind of person who can buy along this trend line, never have to worry about it again. Just fucking forget it. Go 100x margin long and live your life. Just kidding. Maybe not do that. Maybe like 10x. Maybe like 10x would be fine. Anyways, that's going to do it for today. I look forward to seeing you guys in a stream soon, and signing off. Take care, guys.